and safe competitive monetary system that supports innovation. And we're also going to touch on the topics of what type of digital currencies are good for financial inclusion, then what virtual assets and virtual asset service providers, commonly known by the FATF, the Financial Action Task Force, that's their definition of a virtual asset and a virtual asset service provider. So what's the evolving compliance strategies, which are very difficult at the moment with the FATF, and we'll go through those. And so, topic one, how are we going to achieve an open, safe and competitive monetary system that supports innovation? And can the private sector actually play a big role in central bank digital currencies? So I think, the use cases that we're looking at, from last time I checked, there's 121 central banks looking at CBDC projects at the moment. The interesting thing, I've been in blockchain, I've been writing regulation and legislative frameworks around digital assets, virtual assets or crypto assets, depending on which standard setter you talk to, since 2014. I've been looking at central bank digital currency since 2016. I probably have a very better overview than most of the industry. I come from a very traditional finance background. I've run several banks at board level. I was a derivatives trader for 30 years, so I've traded every asset class. So I understand the prudential requirements that we need to see when we're looking at monetary policy and how these things are affected. So central bank digital currencies were not a thing back in 2016. And I think that's the reason, because nobody really thought that cryptocurrencies or digital assets were going to be a thing. Cryptocurrency, the word itself, is a little bit it's a little bit misleading, because crypto assets are not currencies. There are three definitions of legal tender: a unit of value, a unit of store value, a unit of payment, and a unit of transfer. No cryptocurrency at the moment fits any of those. So I don't think we need to put them in the bucket of legal tender. I think the issue was when central banks started to worry about cryptocurrencies. This ecosystem has only been around since 2009 when Bitcoin was created. And the ecosystem borrowed terms from other parts of regulation. So a crypto exchange is not an exchange, in my opinion. Security exchanges are public-private partnerships. They're more like matching engines. They just match. They don't take any risk. So I think the word exchange is very naughty. I prefer to use a digital asset marketplace as that reference. And a cryptocurrency is not a currency. Everybody has a very different definition of the word money. But money, started from when we used to barter gold and vegetables, and it's evolved. Fiat currency is a very different definition. And I think if we all asked each other what our definition of money is, we'd all come up with a very, very different definition. So I'm wondering where my entire team is. So central bank digital currencies became a thing in 2019. Facebook, the company Facebook, came out with a statement that they were going to deliver their own cryptocurrency, which was going to be delivered across the platforms that they own: Facebook, WhatsApp. And I think for the first time, central banks stood up and they really worried, because this was the first time a tech company, one of the big 5 tech companies of the world, could actually challenge a sovereign state. And I think that was the inflection point for why central banks looked at central bank digital currencies, and that as an alternative to the uses of, say, Bitcoin or Ethereum or any of the cryptocurrencies out there, which in my opinion are very small parts of GDP, so they don't actually affect economies. So central bank digital currencies have been around now for a few years. People have been experimenting with them. And it's been interesting. I think when I first started to talk to central banks in about 2017, and the Financial Stability Board and the Financial Action Task Force, nobody thought that this was going to be a thing in 2023. But if you look around the world and the amount of people the amount of central banks that are dabbling in central bank digital currencies, it's very relevant and it's quite significant. Now, I have an issue with central bank digital currencies, and hopefully my other panel members, when they join, can talk about this a little bit. There's what I call the central bank digital currency trilemma. We have a trilemma between security, privacy, and compliance, and none of those three issues, I think, have been solved by any project that is available at the moment. I've had the pleasure of working on a number of central bank digital currency pilots in Mauritius. I worked on the first one in the East Caribbean Central Bank, and I looked at how the Nigerian Central Bank are implementing the e-Naira. So where are you? Sorry, my panel's just coming, and maybe the host can help me on this, because I think you need to get some input on their positions on this. So the trilemma of how we deal with compliance, security and privacy has yet to be solved. Most of these central bank digital currency projects are in pilot, and are they going to really, really solve the problems of middle and small economies? In some cases, yes, but every use case is different, and I think we really need to recognise that as a population when we look at central bank digital currencies. So the first CBDC pilot in the world was conducted out of the East Caribbean Central Bank. Now, the issue with the East Caribbean Central Bank was that because of the FATF requirements around compliance and money laundering and terrorism financing, a lot of the big banks, corresponding banks, pulled out of the Caribbean. So Timothy Antoine, the governor of the East Caribbean Central Bank, has 300,000 people under his mandate, 8 islands. So his need to do a central bank digital currency was very, very, very different. No, we've got someone. Was very, very different to the needs of other central banks, because he had to actually start to bank the people. So that retail central bank currency was a very different use case from what we see in the other emerging markets and in the first world. My loudspeaker, I'm just going to check. Maybe one of the organisers can come in and turn everybody on. Sorry about this technology, everybody. Technology, everybody. If we can't figure out how to do a Zoom call on a central bank digital currency, how are we going to implement them is my question. Okay, so they're having technical issues. I don't know who can hear me. If anybody is in the chat and they can hear me, can they please raise their hand or just make a... Dr. Rahul, you're here. Yay.
And can you hear me, Loretta?
I can hear you.
Oh, so good. So good.
Yes, everybody. Lovely to see you. I've been rambling on to the poor audience about central bank digital currencies and my thought and the trilemmas of them. So I do apologise to everybody, but we have one member of the panel, and I hope I haven't bored everybody, but at least I've opened to food for thought. So, Dr. Rahul, I've just been talking about what I know about central bank digital currencies. I've worked on 7 projects live at the moment and pilots since 2016. I write legislative and regulatory frameworks around crypto assets and digital assets. And I was just saying to the audience that the only reason central bank digital currencies became a thing was when Facebook dared to challenge the sovereignty of countries when they announced that they were going to make their own cryptocurrency with WhatsApp and Facebook and whoever else they own. And central banks stood up and said, we can't have a technical company challenge sovereign states. And I think that was the beginning of why central bank digital currencies became such a thing. So can you please just give the audience a bit of a quick 5-minute rundown on you and who you are, because I think they're sick of me talking. That would be very helpful. And then even if it's only you and I, we can dive into an interesting conversation. Thank you.
Very happy to do so, Loretta. I mean, I hope my connection stays safe. I'm blocked by our company firewall. That was the reason. So I'm now connected via smartphone, and you can imagine that might work or might not work. But let's see. You know, we're in Germany. Germany is not as advanced as Africa regarding connectivity. We have a very bad mobile network. Okay, yeah, that's how it is these days. Okay, yeah, I mean, thanks for having me here on this panel. The topic of our talk was regarding lessons learned for mid-size and low
and I've given a good rundown. So
CBDC,
I've given a good
the intention
overview.
was that I give a very brief talk regarding learnings from CBDC projects we have done. Please. Maybe I can do it a bit less brief now because we are lacking a few colleagues for our panel. Okay, perfect. But of course, it would be nice if I briefly start with a short introduction of myself. I'm Raoul Herborg. I'm managing director of a company, a separate unit that purely focuses on central bank digital currency within Giesecke & Devrient. Giesecke & Devrient, you might know, it's a banknote printing company that has been around for centuries. We deliver credit cards in the billions. We have invented the secure element. We provide the eSIM for current Apple iPhones and secure connectivity for example, German embassies around the planet. Why am I saying this? Because I consider these to be quite relevant competences also for a CBDC ecosystem. And the team I'm currently leading has been built together from all these units. So we're currently a bunch of 75 people from more than 20 nations that are purely focusing on central bank digital currency. We have already done more than a dozen of projects and both consultancy, but also some real world projects. And let me give you a quick introduction of the main learnings and that especially low and middle income countries could have from a CBDC. And from our perspective, really to summarize it, we see 3 learnings. First learning, maybe from our perspective, payment in the digital world is not a solved problem yet. So of course, if you're a citizen of a modern city, even in Africa, payment is very easy. But there's still a lot of people who have no connectivity, who have no access to expensive smartphones, or maybe cannot afford a data contract. And therefore, I think a central bank digital currency, which would be a payment instrument that would come without any commercial interest, as it's not provided by a commercial player, could truly deliver on that financial inclusion topic. And maybe to make it a bit more tangible, we are just about to finish a pilot with Bank of Ghana. And with Bank of Ghana, we conducted a pilot both in the city, but also in a very rural area. And it's a village with no connectivity, with hardly any power supply. We provided smart cards to the people in this village, and they were doing their first digital payments in their life. So here it truly delivered on this promise, enabling people to participate in the digital life. The pilot was very well accepted, so people were asking for more cards, for more devices. So with this solution, we can do consecutive offline payments. You know, person A pays to person B, pays to person C, without any connectivity in between. And of course, these private companies tend to talk a lot, but quite soon there will be another paper by Bank of Ghana published that will detail on the results of this that was very closely monitored also by user studies. And they can read the figures about the acceptance was quite high, and We even experienced some new use cases we weren't expecting, that people were actually bringing their physical cash to these small merchants to swap it to e-cedi, because they considered the e-cedi on the card more secure, more safe than the cedi in their hands. One learning is financial inclusion. Second learning is one that's maybe not so tangible, but we see a lot of motivation from central
I think
banks
these things are very,
with
very, very
CBDC
important.
to provide
I'm going to play devil's
a
advocate
payment
because it's you and I
instrument
at the
that
moment.
comes with
The issue I
substantially
see
lower costs
is
than current
on
solutions.
trust, and our topic today is do CBDCs hold the promise of digital trust, and what's the case for low and middle class economies? I do a lot of work across the emerging world. I spend most of my time in the emerging world. And the issue, as I see, is that many of these countries are not banked. So it's very different in Germany, Australia, Canada, where 97% of the populations are banked. But where you have populations where 97% are not banked, these things become very important. And if you look at the mobile penetration of Africa and India in the emerging world, it's more than 100%. And even in places like, Mauritius, Madagascar, across Africa. So I see your point. I mean, and I think it's a very important thing for people to understand that digital trust, coming from an institution that is recognised to be trusted and has done so in a trusted way for many decades and many centuries, is a very important thing in emerging middle and low economies. Yeah, I sit on the advisory board of UMFIF.
Yeah, absolutely.
Yes.
I couldn't agree more. And regarding this trust, we actually did a study together with OMFIF. It's some institute on source of. Okay. I think we've also met in some of these IMF breakfasts. Don't want to bore the audience. We did a study, and central banks are definitely considered as a source of trust. And maybe this relates also to this topic of public digital infrastructure. Of course, I know we are here at a RegTech event with many startups and so on, but I think there is a need, at least for certain services within a society, where there's at least a public alternative. So an alternative that is not run by commercial players. And here in Germany, we experienced this big time in the COVID crisis, where there were no respirators, there were no masks, and it kind of demonstrated or highlighted that there are services where the government should play a role. And the world is getting ever more digital, and there's no such thing like cash that everybody can use, even if you're without a bank account, where you don't have to disclose your data, where you have no transaction fee.
It's an add-on.
So there's no such thing
I
for
think
the
that's a
digital
very
world.
important
And
point,
from our
because when
perspective,
we
really
look at
a
central banks,
bank could
they are
deliver
usually very autonomous from
additional
government. So
payment
they have
instrument for the
very
digital world.
strict
It's not there to
regulatory
replace all
requirements,
these cool
prudential
private
regulations.
solutions,
There's
but at
legislative
least as an
requirements around
add-on.
what central banks can and cannot do.
Yeah.
They are publicly trusted infrastructure, but they're not generally related to the government. So they are trusted in an autonomous way. And I think that's a very important thing to note, because if you look at stable coins, for instance, private, not central bank digital currencies, but issuance of private money, we've had a lot of problems globally because they're not under prudential regulations. And I think central banks have very stringent regulatory and legislative requirements. So on CBDCs, this is a very important thing. If you leave this up to, say, a private company, and I'm not saying that private companies can't help central banks do that, because for innovation and digital payments and cybersecurity, we really need that. But there's a lot of vested interests. Central banks, when we're looking in emerging markets, tend not to have a vested interest in, because their mandate is financial stability and servicing their economy. So I think that's a very important note, especially when we're looking at what this topic's about, low income and middle income economies. Yes.
Yeah, I absolutely agree. I wanted to add one last point to my introductory kind of talk, and that's from our perspective, a CBDC could also be a platform for innovation. So it could be also, I mean, whoever comes up with a new payment innovation, if you're a startup, you always have this kind of network problem. You have to find enough merchants to accept your payment instrument, and you have to find enough people to convince those merchants, and vice versa. And if you do a central bank digital currency proper, which is not to replace the private sector, but provide like a core solution that ensures the integrity of the ecosystem, that provides maybe SDKs for commercial players to integrate, then as a startup that might also need less regulation because you're not coming with a credit risk, you're only distributing an existing payment instrument. So that might be a great platform to build new products and services on. And that's, for example, something we have elaborated, or we're currently elaborating with Bank of Thailand to a large extent, where we're also doing a pilot. There we are currently at 3,000 users in the pilot and scaling up to 10,000. Of course, we have our own kind of payment app, but this is pretty much just for pilots. But for these close to production cases, we typically provide software development kits, and they are integrated into existing apps of commercial banks in Thailand. But also Bank of Thailand, for example, did a hackathon where some fintechs could create cool, innovative solutions on top. There was a green wallet by one startup. Another startup made some insurance
I
app
completely
where
agree, and I
payment was
think people get
integrated. So I
this
think
very
a
interesting
CBDC, if done right,
exponential belief
and
that innovation
it
and central banks
could
can't go
really
together.
be kind of a great
And I
platform
think
for
that
local
when we're
companies to
seeing
build
central bank
products
digital currencies
and
being built,
services
it's
on
not
top.
just about the central bank building it, because most of them don't have the infrastructure to do that. So they do need private enterprises and private players to help them do that. And and I think one of the questions we have is, how do we achieve an open, safe, and competitive monetary system that assists innovation? I think we can do that, and I think my personal belief is that in the future of money is going to be a mix of private money, stable coins, central bank digital currencies, and I don't think for 1 minute that we should take cash out of systems. I think there are certain parts of populations, like, my father's 95. Ask him how to use how to Zoom. He can't do it, but he trusts cash. So there are certain parts of the population that need cash. There are certain parts of the population that use ATMs. Certain, will do pay and pal. Everybody has a different requirement, and it's not that a central bank digital currency is trying to replace those. They are just complementary, and they will all, especially in mid to low income environments, I think they will just add to help these economies grow and to innovate and help companies innovate. So I'm very excited about this, because I think people also get confused that they think that central banks are going to control money, because in some countries there isn't trust in banks. I work across Africa. There's a lot of mistrust. Banking systems are very fractured. There's not a lot of trust in the banking system per se. But I think with the central bank digital currency, if it's done right, with the mix of private and public players, the right mix of cybersecurity, and the right mix of compliance and privacy considerations, we can actually really change the world for the better. And I was talking before you came on, Rahul, I was talking about what I call the trilemma of central bank digital currency: compliance, privacy, and security. They're three very difficult topics to tackle. But I think myself, looking at the number of central bank digital currency projects that I've worked on in the last 6 years, these things are starting to be solved. And the scalability issues, the throughput issues. People look at cryptocurrencies and things like Ethereum. You process one transaction at a time. The financial system doesn't work like that. And that's why CBDCs are very important, because we do multiple millions of transactions per second in the financial system. There's a trusted way to do that. It doesn't work in the world of the blockchain world. And I think that's a very important thing for people to understand, because blockchain solutions for CBDCs and public blockchains especially, they may have a role with security, because I do think the security protocol layers of things like Bitcoin are very important, but they're not going to be based on public blockchains. They're going to be a mix of private chains and public, maybe using the security protocols of the public blockchains. But we also don't want central banks to be having everybody in the world, verify a transaction. That's not an efficient economic solution, and it's certainly not. It's not innovative, and it's certainly not going to help emerging economies. So, Rahul, thank you for that introduction. I've got another question, and I think at the moment it's just you and I. So we're going to have we can have a good conversation. Yes, please. Okay.
Can I comment on what you just said? Because the conversation was about to get very boring, because I'm always nodding. Agree. There's one thing I don't fully agree regarding this trilemma: but, security, compliance, privacy. I don't see this as a trilemma, because I think security is a prerequisite for everything. Without security, you cannot have privacy. Without security, you cannot have compliance. Because if security is breached, then privacy is violated. If security is breached, then compliance is violated. So I would see security as a foundation, and then there's of course the dilemma: privacy, transparency, which is, by the way, a domain where we see the biggest difference in countries. So in Europe, it's a lot about it has to be fully privacy preserving, and people are crazy, at least in theory, about privacy. Still, they share everything on Instagram, but the moment the government and the central bank, is there any interest by a central bank to collect data?
I don't believe so. I have a 19-year-old daughter, and it's
while
funny,
in African country,
it's
it's actually a way
anyone in a government
to
or a
get
bank.
more
But you ask her if she was Cleopatra in a past life on Facebook, and she'll give you everything. That generation is very interesting. But my reason, it's a good. I think we're having a good discussion. The one issue that I do see, and I call it the trilemma, because security, privacy, and compliance in my way of that I looked at central bank digital currencies. There are certain countries, which I won't name, that are building CBDCs for control. Because if you control people's money, you can control everything about them. But in democratic countries, central banks are autonomous to government, so I don't think that's a problem. But the privacy thing, I'm a mother of a 19-year-old, and I do worry about unintended consequences. If central banks and in this system, people think that central banks are going to be issuing house loans and credit cards. They're not. It's not going to take out the commercial banking element that we see. That's a fictitious lie. But I do worry, in some of these systems that some of the countries are looking at, that once a central bank has control over your money, they can control everything in your life. Now, that's not in democratic countries, but in some situations we are seeing CBDCs used to control. And I think that can be very dangerous, of the unintended consequences of that. But what you and I are talking about, in the countries that we deal with, that's not an issue. But I think it's something that people need to be aware of, that we do understand that privacy, in democratic worlds, privacy is very important, and privacy and secrecy are not the same thing. So that brings us into the next question. I do a lot of work with the FATF, the Financial Action Task Force, and they talk about virtual assets and virtual asset service providers. So the definition of a virtual asset under the FATF definition is a digital representation of value that can be traded, transferred, or used as a unit of payment. That's effectively a cryptocurrency. And anybody that's dealing in those services is what we call a virtual asset service provider. It's interesting then when we move on to when we're looking at central bank digital currencies, they are evolving compliance risks. There's still a lot of people in the ecosystem that don't understand the compliance, the AML CTF requirements that the FATF put on. There's recommendation 15, 16. The FATF do say that central bank digital currencies are not considered to be virtual assets. And that's very important because they're already regulated as they're just a digital representation of a fiat currency. So they're not a virtual asset. They're not a virtual asset service providers. Certainly virtual asset service providers can, I think, enhance central banks by helping them build, better tech models, better innovation. But I think that's an important thing for the audience to know, that a virtual asset and a CBDC are not one and the same, and they're not even related, and they're considered to be very different under regulatory requirements. So my next thing, as it's just you and I, Rahul, do you believe that we can build an open, safe, and competitive monetary system that supports innovation with CBDCs? Yeah.
I'm not sure whether we can build the entire thing, but it could add to the equation. So maybe last comment to what you mentioned before, that's also for me kind of the key argument. Whoever tells me, well, who needs CBDC? It's a solution in search for a problem. I think payment has always been both private and public. And I mean, 90% of all payments are done by commercial banks, commercial players, payment service providers, e-money providers in African countries. And that's great. But there has always been this public alternative. So even if it's 10%, and you can imagine, I mean, we make 1 billion revenue with banknote
and
business. So we also are fans for cash, that cash hopefully stays forever. But for me, CBDC is really nothing but a third kind of form of cash. You can have cash in coins,
just a
cash
digital
in banknotes,
representation of that fiat currency. It's nothing
exactly
more.
So,
it's not a cryptocurrency.
So exactly what you mentioned.
I think that's a very important thing that the audience understands.
Everything what
central bank
refers
digital
to cash,
has nothing
the same
to do with
regulation also refers to CBDC.
And maybe it's a lack of education, I think, even between central banks and people. They confuse. And it's, for me, it's a problem because the standard setters. I have the FATF talk about virtual assets. I have the IOSCO now talk about digital assets, and I have the FSB talk about crypto assets. They're not one and the same thing. So in my perfect world, I would really like all the standard setters to have one definition that was global, that everybody could understand. The prudential regulators, the central banks, the securities regulators, and the AML regulators, because us as the industry, and when I mean anybody that's in technology, anybody that's building these platforms, we need to know what the rules are, and the rules are not going to change on us. But each different regulator has a different requirement, and it's a very hard thing to be managing if you're a startup, you're a fintech company, you're trying to build a CBDC, you're trying to build a stable coin. We need legal clarity, and we need harmonization globally around that. So I think we... Yes, that's what I said.
Hi.
Hi, Diane.
Hello, everybody. You're doing a great job. Can you hear me okay?
Oh, yes, we can hear you. Very, very nice to have you on. Do you want to give up the audience? Because I think
Loretta,
they're probably sick of me.
Diane on the call.
Do you want to give a quick, just a couple of minutes intro on you and what you do?
Oh, sure.
And then we'll dive into some more questions.
Well, I've had the pleasure and honor, and that's the way I look at it, to work in Africa for 2 different central banks for the past 10 years. And I think what I see from the central bankers that I have spoken to, not only where I've worked, but in the region, like Ghana, for example, that there is a very strong willingness to integrate the economy and to promote financial market infrastructure. And I think you mentioned that. I mean, it's kind of a prerequisite for central bank digital currency is what's the distribution channel. And I think that in Africa in particular, and obviously in some countries more than others, there is an efficient distribution center, segment of the economy that we might not recognize coming with our Western lenses. And that really is if you go to a little shop to buy juice or milk or whatever commodity maize to send to your mother in another village, how do you transfer money? How do you link that to the development of CBDC? And I think what we would find is that there is like a sophisticated, maybe informal sector that really could be used to leverage the idea of integrating the CBDC into a system. And I think that's sometimes maybe more efficient than obviously the central banks, and I'm speaking as a former central banker myself, the central banks have to be engaged. But I think that the starting point might be the informal sector and how you can link that to distribution of currency, because it already exists. And sometimes we forget, that is like one system that could be leveraged to make CBDC more accepted, maybe more quickly.
And it's a very good point, because I do a lot of work. I sit on a number of companies, fintech companies in Africa. And the interesting thing I find is the M-Pesa. I think the M-Pesa is probably one of the best social experiments that I've seen in the past 50 years, because in Africa especially, and in America and Australia, where people still use checks, for heaven's sakes, the digital payments have been so important in Africa because there was necessity. Innovation and technology came out of the telecoms because at the time there wasn't the ability for banks to move money. So things like the M-Pesa in Kenya and other mobile money, it's so prevalent in Africa, and it's so everybody uses it. Everybody's used to it. So I think it's a very good point that the interaction and how we combine these is very important, and it's a very specific thing to Africa and India and I think that we forget in the West how advanced mobile payments are in Africa. I really think we forget how advanced Africa is in many situations. And I think that's also a case that Africa doesn't put its hand up and yell and scream and say how great we are. But as far as mobile money, I think Africa, the African continent, is by far the most advanced of any country I deal with, and I deal, I think, with 79 at the moment. So I think that's a really good point. So I've got a question for both of you. Now, do you both think, so this is Diane, maybe you can go first and then Rahul. So do you think that CBDCs are going to be the strongest vehicle to achieve financial inclusion, or do you think it's going to be a mix of things like mobile money? But from Diane, your experience, what do you think?
Having lived in both Northern Africa and Southern Africa now for the last 10 years, I mean, we would like, I think, to promote the idea of improving the financial sector, the formal financial sector through banking. But I think the reality is something quite different. People are used to paying, as I said before, through their little shops. They are very sophisticated when it comes to telecom. And I think that we have to sort of adapt our concept, sort of maybe our Western bias concept of what a CBDC is, to apply to these local country or local ecosystems that have been very efficient, where you wouldn't expect them to be very efficient.
Absolutely.
So I think there's just a whole lot of opportunity if we just, like, if we're on the ground, like I said, as I was for 10 years, just to see how things really work and how well they work.
Absolutely. And so Rahul, what's your take?
Yeah, well, I mean, partially I also already gave some hints during my introduction. So, I mean, first of all, again, it's one payment instrument that comes without commercial interest. And I mean, it's very obvious. I mean, people are not unbanked because it was not be possible to provide some services to them. They're unbanked because they're not interesting for commercial players. So that's the reason why they are unbanked. And the reason to solve it, to provide a solution that comes without commercial interest. And I'm not aware of any payment instruments that comes without commercial interest besides cash.
It's used to
Cash is
launder
great.
money.
You can use it everywhere. It comes without transaction fees. You don't have to disclose any data. You don't need a contract with PayPal or any service provider or bank to cash. The only problem with cash is it does not work digital. And some people use it for laundering money, yes. So obviously, I think a CBDC could be a strong addition to the equation. I think we delivered that in Ghana and in other pilots we are doing. I mean, maybe you really read the report once it comes out. People, I mean, that was not a Western situation. That was a very rural village. It were some really small shops. I could have shared some pictures. And it was somewhere in the middle of nowhere, no connectivity, even no power supply. And people were doing with cards at small merchants, which we provided kind of point of sale terminals that could even run on a battery. And people were able to do consecutive offline payments. They were paying digital for the first time in their life, and they really liked it. They brought their cash to the merchant to swap the cash to ECD because they considered the ECD more secure than the physical banknotes, which we don't like as a banknote producer. But so it can truly deliver. I know my answer is too short because financial inclusion has a lot more aspects and a lot of additional dimensions. And here maybe the last point I would like to make, but I mean, if it would provide this core infrastructure where you could make sure that no money is duplicated or created or no fake money is circulated and the central bank ensures the integrity, then the world is open for all local fintech startups to create solutions that deliver financial inclusion, microcredits or whatever. It would be this common platform that can be utilized. So yes, my answer is definitely yes, but you might realize I'm quite enthusiastic with my entire team about central bank digital currency. For us, this is not just a job. For us, it's also some sort of a mission.
I've got one more thing and a question. I think we'll throw it to audience because we're running out of time because we started a bit late and I think we've all got things on. So I'm a big advocate of blockchain. I've been running regulatory and legal framework since 2014. I come from a very traditional banking background. I've seen the problems in banks. I think the friction in systems, things like blockchain technology really do change everything because they disintermediate markets. And when I say they change everything, because intermediaries have made money out of friction in markets forever. And I think the promise of things like this new technology, and all these emerging technologies, AI, blockchain, we've got non-fungible tokens, all these things that I wrote regulations, central bank digital currencies, prudential regulations 5 years ago. All I had to worry about was a cryptocurrency. 2023, I have such a bigger mandate to worry about. Like a CBDC is just one part of it. But the thing that I see very exciting, I want to question you both on this, is I've been doing a lot of work, and it's only been around in the last year, is decentralized finance. And what I mean by decentralized finance, we are seeing peer-to-peer transactions. We are seeing everybody now in the world can effectively be their own bank. They can do asset management, derivatives trading. We can do that instead of banking institutions. We can do that as people. So I see the power of things like AI and decentralized finance, and the power of some things like CBDCs, because I don't think competition, I don't think these things are exponential anymore. I think technology has changed everything. So I see everything actually living parallel and working together. So I see decentralized finance being one part of the way that people can create new businesses, entrepreneurs can grow. It's an amazing thing for me, decentralized finance. I think CBDCs are amazing things. I think they can coexist. I really do believe that. But in things like decentralized finance, we do need proper regulatory and legal frameworks, which is coming. What's your take in Diane on this? Because I see in Africa especially, I think this is going to be the one big fundamental change that we can see these two very exponential financial transaction systems working very well together. What's your take on that?
By way of background, I mean, I grew up as a bank regulator in the U.S. and the U.K., so I have that sort of formal financial infrastructure lens. But then, having worked 10 years in Africa, I see the promise of decentralized finance. I see it working, and perhaps working very efficiently. If you go to a village and someone, as I said before, has to send some money to another person in another village, a relative or whatever, there's sort of informal infrastructure, and more increasingly using the telecoms that really could be leveraged, and there could be lessons learned for the West. I think it's a very powerful statement if we look at countries. Okay, it's not just Kenya, but let's say Uganda, or even well, yes, the big guys, but then you have the small guy. Ghana is one of my favorites, but I also spent a couple of years in Madagascar, which is very underdeveloped, and there are systems that work. And so I think that again we need to take a different view on what works and how do you leverage that, because there's an incredibly strong interest in centralized digital currency, CBDCs. And like I said, we see it working in small pockets perhaps, but I think that there's a lot of promise in Africa in particular that could be leveraged not only by Europeans but also Asians, for example, that are already doing incredible trade through Africa in particular. So I don't know.
So I agree with you completely. Rahul, have you got any comments on that? Yeah, I just think we're moving into a new paradigm, and I think with Web3, decentralization, blockchain, AI.
I think I wouldn't have much to add here. So
and
I also
it used to be you had to be financially included to participate in economies, and we are seeing that change in our very eyes. And from what I've seen, from where I've seen technology and innovation move in 5 years, where it's going to be in 2 years, I'm so excited. And I see the biggest in these economies, Africa, into the emerging markets, is where these digital assets and CBDCs and decentralized finance makes the most difference, because it affects people's lives. And I think, to me, that's the most exciting thing that we can ever experience in our lifetime. I mean, we've seen the birth of a new asset class. When you look at digital assets, to live through the birth of an asset class is so exciting for the next generations. So, I mean, I thank you for this great conversation. We're running out of time, so I thought we might be able to take some questions.
I have a question for you. I don't know how important is regulation? You mentioned that there are some countries that really don't heavily regulate this specific sector. I mean, is regulation a precursor for success? That's a question for you or someone else.
Yeah. So I write regulatory frameworks around securities, prudential, and AML. And I think it's the fundamental thing that is going to drive mass adoption, and it's very important for this industry if it's going to grow. And I say that from 3 different angles, because I work with I work with central banks, securities regulators, and the Financial Action Task Force around AML CTF. The issue is that they have different models of regulation. So principal regulation, which investor protection, is vastly different about how that regulation is set. And prudential regulation is principle based, but AML CTF is risk based. So they're very different types of regulatory frameworks. But it is very important in 2023, and I think the G7 flagged it yesterday. I do a lot of work across the Commonwealth. I'm actually the advisor now to write the model law for the Commonwealth, which is a lot of African and emerging countries, because I see regulation as being the fundamental success of technology and industry, and for things that we see around digital assets. If we don't have regulation, the industry can't grow. We can't migrate companies across borders, and if we don't have regulation, the nefarious actors, who will always find ways to do things, will find ways to penetrate these markets more and more. But if we have regulation, we stop scams. We protect consumers. We protect investors. We protect prudential regulations, which have been around for a long time. So that's my take. Very important, and it's coming fast. Rahul, are you put your hand up? Yes. Yeah.
Yes, unfortunately, I really have to leave. I have actually
Rahul,
one of the
thank you for
owners
your
of
time.
GND standing outside
Diane,
who
you and
reserved
I
this room.
left.
We had a bit
I've
of
got
a
to run
mess
out. I
with
think
the
you and I both have got
shifting
a short
with the
schedule.
many
Maybe
times.
we could take one or two
But
questions.
thank you very much. It was my pleasure to be
If
part
there's
of this
anybody
panel.
that's got a
And
question
yeah,
for Diane
have a
or
very
myself.
good day. Thank you very much.
Diane, by the way, you're my new
No,
best friend.
you're my new best friend.
Let's speak
All
in the
right, so
same
I'm gonna,
language.
if no one else, asks the question, I'm gonna have a question for you, which you don't have to answer right now. Self-regulation versus prudential regulation.
Yep. So self-regulation. So I wrote the first ever self-regulation for Bitcoin in Australia in 2014, and I did that because I come from a financial markets background. I've worked in banks. I've been regulated by 49 different countries. I saw that there was no formal regulation, and we're still struggling with that. Countries don't want to regulate. So in place of formal regulation, self-regulation works, but it's not legislation, and it works when you don't have legislative regulation, and especially in prudential regulation, when we're looking now at things like stable coins, and this is very important. And I can't emphasize that to the audience more. Proper, sensible regulation that doesn't stifle innovation, that mitigates the risks to countries and jurisdictions, but harnesses the opportunities that technology and these new products and services through technology deliver, is the most fundamental important thing of 2023.
Well, thank you so much. That's a very interesting and I think maybe comprehensive view.
Well, it's my mission, my life mission since 2010 is to make sure that we have a regulatory framework that doesn't stifle innovation, but is sensible, that protects jurisdictions, that stops the nefarious actors doing bad things. And the internet taught us one thing, and that was the walled garden approach does not work. We all, whether we're policymakers, we're industry, we're central banks, we all need to work together to make sure that the rules that we're writing are going to be harnessed and effective for the next generations to come. I have a 19-year-old, and everything I think about is for her and her children and her children. It's not about me. I'm 54. I learn everything in a book, but we're talking about generations, and especially in places like Africa and India, where you have this as an extension of your left hand. It's a different world, and we need, as policy writers and regulators, to embrace technology, but we need to understand it to write sensible regulation.
I did my master's thesis at the London School of Economics on the Basel Accord. So 1988, and even prior to 1988, it just supports what you just said. There's a need for a collaborative report, and that's how you drive policy. And it's not national, it's global. It has to be integrated. And I think we have some successes.
And it has to be harmonized. And otherwise, we're seeing jurisdictional arbitrage, and that's not good. So, companies, fintechs, if you're listening here, don't go to countries with no regulation, because it will bite you. Because the G7 and the G20 are working on this. It's funny you say that, Diane. My mentor in all of this is Lord Magnum Desai, who was a professor at the LSE, and he understands prudential regulation probably better than any other person that I know as a macroeconomist. He was with Nixon the day they got rid of the gold standard, and he as the oldest economist I know, he's 87, he understands digital assets. And I think that's very, very important, that education from policymakers is so important, that they understand that we're writing these new policies for the next generation, not for everything we learn in books. And my other mentor, who's very interesting, everyone should look him up, is Robert Kahn. So Bob Kahn, nobody really knows. Bob Kahn built the internet. He wrote the transmission control protocol and the internet protocol. He sent a message across an open system to a man called Vint Cerf, which said hello. So that was the inception of the internet. The internet is not secure. And this is where it's very interesting how we look at CBDCs and securities and digital assets. We can now transfer information across open systems, which the internet allowed us to do, but value securely. And that is the biggest fundamental change, I think, that we've seen with the emergence of blockchain and other emerging technologies, that we can now, on open systems between each other, transfer information and value and do it in a secure manner. So that changes everything, whether that be for a CBDC, decentralized finance, these things for non-fungible tokens. I think we are entering the most exciting time in history if we do it properly and we do it with sensible.
Well, we have some very good prototypes working right now. I think UAE with Canada and Japan, in the US, the Boston Fed and the Cleveland Fed. There's a bunch of initiatives from central bankers trying to test out. It's not just a question of macroprudential policy, it's a question of security and systems. So you're right.
And I'll give a shout out to the ones I work on. I'll give a shout out to Timothy Antoine, the Central Bank Governor of the ECCB, the East Caribbean Central Bank, and Havesh Siegalam, the youngest central bank governor in the world of Mauritius, which have been working on this for the last 3 years. Security has been their priority, and Ghana, and Kenya, and a number of African countries. So I think we can all learn from each other. Central bank digital currencies, and think tanks like OMFIF who work on this. So don't be disheartened, I think, as a startup if you're listening to this, because we need you. And if you're good in security, you're good in open systems, if you're good in cryptography, this is where you come into your own. We all need to work together to make these things like
and what I found talking to the central bank governor of Mauritius and also Ghana to a certain extent as well, is that these central banks are willing to share information and willing to talk to the private sector on next steps. And we can't dismiss that. I mean, as a former central banker myself, I know that we don't increasingly live in this sort of ivory tower. We are open to discussion. Again, I'm not a central banker anymore, but I see sort of a sea change in terms of transparency and in willingness to listen to different ideas.
Absolutely, and my shout out goes to Havesh, the governor Havesh Siegalam of the Bank of Mauritius. He's the youngest governor in the world. He understands technology, and anybody out there that wants to talk to him, please do, because he understands. And the finance minister of Mauritius, who's also the youngest finance minister, they understand in the realms of doing things properly in proper prudential regulatory frameworks, working with the private sector. Nobody's got the answers, but if we all collaborate and we work together and we use technology, we're not scared of it, we educate ourselves, we can really change the world for the better and for the next generations. And that's what I'm so excited about with central banks and CBDCs and decentralized finance and the way that this has all come together. I mean, I have a lot of PSD because I've been writing this stuff since 2014. I used to think that central bank governors hated me in 2015. They thought I was that I was some crazy woman from Australia. Move on to 2023 and what I looked at then and what I looked at now is now coming to fruition. And I think African countries are in the best place to take advantage of technology and mobile payments and CBDCs and India, because these are the biggest economies in the world. And a shout out to the Commonwealth, because I work for the Commonwealth Secretariat now in writing crypto model law. We are a third of the world's population. That I think that's a statement in itself. If we can harmonise and harmonise regulatory frameworks and all agree that technology is going to make our economies for the better, then we're a third of the world's population. End of story.
Thank you so much for allowing me to have this conversation. And I really hope, Loretta, we can catch up offline.
Oh, and I hope the audience, I'm sorry, audience, we had 6 panel members, but for whatever reason, sorry about technology, we didn't. So we ended up having a 3-way discussion. I hope everybody found it useful. Yeah, you can find Diane and myself and Rahul on LinkedIn. Any questions, because we don't have time now, but we're more than happy to. And I'd love to thank the organisers. Cyril, you've been amazing at RegTech Africa. I hope it was useful to everybody. And thank you so much for having us.
Thank you.
Bye. God bless.